focus to Forging then. The company just announced fundraise, and to discuss this in greater detail, we are now joined by Vidya Shankar Krishnan, Chairperson and Managing Director at Forgings. Sir, thank you so much for taking your time out and joining us here on ET Now. You will be considering fundraise to the tune of 600 crores via QIP. If you can take us through what this proceeds will be used for, that's part one of the question. And part two, by when is the entire fundraise expected to be completed?
Thank you for having me here. We are looking, as you said, to raise about 600 crores. Largely, this will be used for strong opportunities that we see for capex, and some portion of it will be used for debt repayment, but largely for growth opportunities.
Largely
That is the purview of this fundraise. And we are also looking at timing this wise, we are looking at slightly better market conditions. So the board will take a call based on the relative positions of the equity markets.
Okay, so the timing will be decided basis the market conditions. But since you said that some part of it will be utilized for debt repayment, if you can take us through the finer details, what is the debt currently and how much will the debt and consequently finance cost come down by as a result of this fundraise being used for capital and debt repayment?
Yeah, as it is, debt stands at about 1,050 crores and 1150 crores, and we have about 200 crores of cash on hand. So the overall net debt stands at about 950 odd. Currently, interest costs are on an annualized basis, we're heading for around 90 crores a year. So with already initiated cost reduction measures, we had targeted a reasonable saving in the interest cost and wanted to save around 30 to 40 crores, which is what I had been public about a few weeks back. So we're basically looking at having the interest cost prior to this fundraise mulling itself. So basically the fundraise is largely for growth opportunities rather than a defensive mechanism at reducing interest or giving the company cash flow by way of using it for debt repayment. But having gone the course, or having considered the course at least, we would like to earmark some portion for debt repayment. Possibly, I'm not saying any hard numbers, but possibly we could look at about 150 to 250 crores being set aside for debt repayment. But that's a call that the board will make at that time.
Right. So largely the fundraise has been done for capital and growth opportunities that the company foresees. Now, I was reading the interaction that you had with investors after the third quarter results, and FY26 you said is largely expected to be a flat year, but you're very bullish on the outlook and the prospects for FY27. And gradually over a period of time, you're also looking to double your output. If you can take us through what your growth plans are going forward over the next 4 to 5 year period, and how will you be funding those growth and capex plans?
Yeah, FY26 was a flat year. You were very right in pointing it out. And 27, we are looking at least 20% growth. So 1,800 plus. Possibly market conditions are decent. We look at knock on the doors of even 2,000 crores. But that's a call that will be taken, that will happen, transpire based on market conditions. But as things stood, let's say a month back, prior to the trouble or turmoil in the Middle East, we are looking at 1,800 to 2,000 crores. However, on the positive side, despite the issue in the roiling in the Middle East, many of our customers are extremely positive on their market.
20%
particularly
growth
on the CV side. And we also see customers changing their buy strategy to Forgings, not just in the on the CV sector, but across all other sectors as well. So that augurs really good for Forgings. Currently, this year we should end up at around 76,000 tons of production and sales. Next year we are targeting, that is FY27, we are targeting at least 90,000 tons of sales. Internally, our goal is to touch or cross 6-figure mark.
Right. So
And
20%.
over the next few years, we expect to do at least 150,000 tons.
Okay, so 20% growth is what you're penciling in, and your roadmap for capacity expansion is also very clear. But also wanted your thoughts on the demand environment, especially from the auto sector. And since you also cater to the export demand, I believe about 38-39% of your revenue comes from exports. Has there been any impact of West Asia conflict either on demand or on your supply chain?
On the demand side, I can very clearly say there's been no reduction. It's been very positive. However, I'd like to temper it by saying that the last word is not yet out on that. We have to see the ramifications of the turmoil. And if it results in persistent inflation and other macroeconomic issues, there will be corrections. But that will be across most sectors. So as it is, markets look very strong. On the supply chain side, the major issue that we are facing is on the availability of LPG, and we are moving over to PNG, which also is not in great shape as far as supply is concerned. And we'll be regressing back to furnace oil in a few places. Our plans to have changed some furnaces to LPG will be going back to furnace oil, and switching on more of furnace oil furnaces in the next few days to mitigate the cost impact. And ultimately, these are very significant impacts, and we are also requesting our customers to support us by bearing the same. However, we are also doing our best to mitigate the same, regardless of who's paying the bill.
Okay, so that's the view and the outlook going forward. But thank you so much for taking your time out and joining us here on ET Now, Mr. Krishnan. It was a pleasure having you here on the show.
Thank you.
But on
Pleasure is
that
mine.
note,
Thank you, Shashi.
we need to slip into a very short break. More news and updates will continue on the other side.